Welcome back to the Old-Fashioned Real Estate Show. He's Jeffrey Holst.
And he is Brian Levredge. And today we're going to talk about 5 ways you can make money in real estate right now.
Right after this, though.
Welcome to the Old-Fashioned Real Estate Show, where hosts Brian Levredge and Jeffrey Holst pour out old-fashioned real estate advice.
And now, 5 ways you can make money in real estate.
Right. So
Right now.
Right now. So almost everybody looks at wholesaling.
Sure, wholesaling. Right. So what is wholesaling, Brian?
Wholesaling is you basically target sellers of property where you're acquiring it at a discount, and then you turn around and you sell either the property or the right to buy the property to an end user for a fee in addition to that purchase price.
Right. So essentially what you're saying is I go out and find a property, I put it under contract to buy, and then I either buy it and then resell it without doing anything. That's called wholetailing, but it's kind of like wholesaling. Or I actually sell the contract itself to an investor who then goes and closes on that deal and buys the property. Mm-hmm. And that wholesaling is something that people like to get into because they perceive that they can get into it with no money. I don't think that's actually true because you've got to buy lists,
pay money for marketing,
do mailings and all that kind of stuff. It's not something that I've ever done. I mean, I guess maybe I've actually wholesaled stuff.
I've done some targeted mailing, but nobody does mailing anymore because it doesn't really work. It's all on the internet. But point being is it's a lower barrier of entry compared to some of the other alternate methods of making money in real estate.
And it is something that if you can find good deals, it is possible to make money in wholesaling, and it's something that can be done in 2023.
That's right.
It's something that I think can almost always be done, and it's just a different strategy. I think the disadvantages to it is it's a job, right? I mean, you don't build long-term wealth through wholesaling unless you redeploy the money that you make into assets.
Well, 100%. And once it's sold, right? You got to go find another one in order to make money. So it's very transactional in nature, obviously.
Yeah, but I mean, we have friends that have been doing this for years, and we've bought stuff from them, and they're continuing to do it. In fact, one of my friends recently made $50,000 on a single wholesale transaction. Mm-hmm. So I mean, it can be lucrative.
Yes.
And so it's something that you can consider. So that is one way you can make money in real estate right now.
All right.
The second way you can make money in real estate right now is...
The natural segue would be flipping.
Flipping, yes. Much like wholesaling, it's still a job. But in this case, you might buy from a wholesaler, or you might, target your own properties in some other way, and then you fix the property up.
Fix the property up, and then resell, usually to an owner-occupant at the end of the day.
Could be to another investor as well. Yeah. Sometimes people want turnkey properties or whatever. The advantages of this are it can be very lucrative. Like Brian and I have done 1 or 2 flips a year for the last few years together, and several on our own. And in each case, we've made pretty nice chunks of cash.
And it doesn't have to be a house. You can flip.
We flipped a quad, actually.
We flipped a quad. We actually flipped a 16-unit apartment building.
We did, yeah.
Didn't quite get into it that way, but that's sort of what happened.
It was more of a long-term flip than an actual flip. But actually, we had Ben Levredge on our show a while back, and he said, I recall him saying on the show that all real estate is a flip in some ways. Any buy and hold transaction should be analyzed as a flip. If you buy a property, even if you're intending to hold it for 10 years, in order to know what your return is, you have to speculate on what you're going to sell it for 10 years from now. Yeah. So yes, flipping is generally shorter term.
Much like with wholesaling, though, same thing. Once you've sold it, it's done. You've got to find another. It is a job. Oh, we also haven't even discussed the tax treatment on both of those things, which is essentially if you're doing enough of them in a year, it's active trader.
Yeah, and so you're going to pay a higher tax
ordinary income tax rates. Yeah.
Yeah, and of course, there are ways to mitigate your taxes, and it's beyond the scope of the show. But right now, the advantages are these are ways you can generate capital without having potentially as long-term exposure to the real estate market. The disadvantages is it's just once it's done, it's done.
What about we could discuss right now a less conventional method of making money in real estate? What would that be?
Lending.
That's right.
Lending. I think lending, that's the third way that you can make money in real estate now. And with interest rates rising, lending out capital might become more attractive to some people. If you can deploy, $100,000 and get a first position mortgage on someone else's flip, maybe you make 10% or 12% interest. That can be maybe a better way to make money than having to take the effort of flipping.
Well, yeah, and you don't have to necessarily lend to rehabbers. You could lend, on a short-term basis. I mean, really, it just depends on what you want to do.
You could even lend on a long-term basis.
You could lend long-term to buy and hold investors, which, not to, spoil the preview, but that will be one we get to in a second. But you get to basically participate and make a pretty good return on your money without the hassle of being a landlord or ownership, right? And you're in a secured position, meaning if they default to you, you could basically take the property back.
And of course, there are different ways to lend, right? You can lend in a secured first position. You can lend in a secured second position where there's another loan that takes priority over yours.
Should you is another.
Yeah. And you can also loan unsecured to people if you want, although that's not really a real estate play as much as a gambling play. But the truth of the matter is, if you're sitting on some capital right now, lending to people that are investing in real estate can be a very effective strategy to deploy that capital at a decent return.
And it also leverages other people's time, right? Because in that instance, you have a lot of potential borrowers that they're out looking for opportunities for themselves, and they're in essence bringing you those opportunities. Not for free. You'll provide capital to them, provided they want to
and of course, the disadvantages to this is that you're not really getting exposed to upside in the market. I mean, that can be an advantage also because you're not being exposed to downside as much. Obviously, if they default and you take the property back, you still have some downside risk. But you're just going to get the return that you contracted for. That's the maximum return you're going to get. So that's a disadvantage in the sense where if we're in an inflationary environment and inflation continues to go up, your returns get eroded over time and you don't have any of the upside that comes from inflation. But since interest rates have gone up fairly sharply, it could still be a really lucrative way to make money in real estate right now. So that's the third way that you can make money in real estate. What's the fourth way you can make money?
Well, we kind of spoiled it, or I spoiled it. Buy and hold.
Yes. So, and this is what most people think about when they're looking at making money in real estate is I'm going to go buy a property and I'm going to hold it, rent it out. And I'm going to make money from the cash flows and the appreciation and the amortization. In fact, we did a whole show about the four ways that you make money by buy and hold real estate. And it's just the tax advantage, and it is heavily tax favored to buy and hold real estate because of depreciation. So you got tax advantages, cash flow, appreciation, and then amortization, which is the debt pay down over time. So those are the advantages of it. What are some of the disadvantages to buy and hold real estate?
Well, Murphy is a big friend of real estate investors. If it can go wrong, odds are it will. And so being a landlord, we've certainly been in position to see.
I've never seen.
I'm not going to say everything because I know it'll happen next week if I say that, but damn if we haven't seen a lot.
Sinkhole's going to eat. Gonna sink your condo or something.
Deceased residents. You see the human condition at its absolute worst. It can make you cynical.
It can. Also, it's just a lot more work, right?
Yeah. It's not really passive. I mean, even if you hire a property manager, you're still managing the manager. They're going to be in contact with you about, so-and-so didn't pay the rent. We're going to have to do an eviction, or, by the way, your heating and air unit went out. There's $5,000 for a new one. I mean, it's, those things happen. And when you have enough units, they will happen more regularly.
Yeah, for sure that will happen more regularly.
Yeah.
So it's definitely, the advantages are clear, but the disadvantages are it's time consuming. Yeah. And also you're exposed to market risk in a way that you're not in some of the other strategies. If you're wholesaling, you're exposed to very little market risk. Worst that happens is you just don't do the deal.
Right.
If you're buying a piece of property, you're married to that property. You own it. It's yours. You got to keep it forever. Or until you sell it and it becomes a long-term flip, like we alluded to earlier.
Yeah.
But it is definitely one way you can make money in real estate in today's market. And then the fifth thing that you can do to make money in today's market is sort of related to buy and hold, but that is you can do some syndication type investing, which is where you're buying and holding usually, but you're doing it with other people's money and you're getting some fees from the associated investing.
Mm-hmm. You often get a piece of the equity or carried interest, as it's referred to. You get all the, well, like Jeff said, the tax advantages associated with that.
Yeah, and I mean, honestly, I wouldn't even call it syndication in general. I would say this is like all of the like sort of subsidiary services that you can provide, right? If you're a property manager, if you're a real estate agent, if you're a syndicator, if you're doing construction, these are all sort of like different businesses. A syndication is a business, right? That you can run, that you can make money through real estate without actually investing yourself into real estate. Mm-hmm. So some of the advantages of that, of course, are you get in, the carried interest and all that. The disadvantages is that you're exposed to some liability that you might not otherwise be exposed to. You certainly want to contact good securities attorneys before you do any kind of syndication. But that's true in any of these businesses. You're going to be exposed to liability. If you're a contractor and you do something wrong, there's some liability risk to you. If you're a real estate agent and you
misrepresent,
there's some exposure there. So that's the thing about business in general, but this is definitely one way that you could make money in real estate in today's market. It's something that Brian and I continue to do. In fact, other than wholesaling, I think we do all of these in some fashion, right? Like we do lending and we do flipping and we do long-term holds and we do syndication.
Yeah.
And I am a real estate agent sometimes, although I rarely do that.
And I own a brokerage.
That's true. It's true. But anyway, so and you're a property manager too. So
yeah.
You got that going for you too. So these are things that you can do to make money in today's market right now, 2023.